Hey, this is Jae Tolliver, and I wanted to share a little bit with you about credit utilization and the proper way to use a credit card when you're trying to establish credit or maximize your credit score. For credit cards, there's something unique that the credit bureaus have insight into with credit cards that they don't on other types of accounts. For an installment loan, like a car loan, they see whether or not you're making your payment each month. They see when you got the account, how much of a history you have on that. And that's pretty much it. So with a credit card, it's a dynamic thing. You can pay it down, charge it up, pay it down, charge it up. So it gives them a real insight into what's going on with your budget. They look at it as a maxed out credit card means you're more likely to default on your debt because you're maxed out. Whereas a small balance using a very small portion of your credit limit means that you don't need to borrow. You're just out there living life and you're good. So the point system is built to reward very low utilization. Even if you pay off your credit card every single month, it just depends on that one time a month when they report to credit. A lot of creditors report on the statement date. So you might use your credit card to get points throughout the month. So let's say you charge your daily living expenses, things of that nature on your credit card. You have a $3,000 limit, and at the end of the month, you owe $2,000. You get the bill, you pay it off. But what got reported to credit that month was $2,000 and not, the zero balance after you paid it. So it looks like you owe $2,000 versus a $3,000 credit limit, or about 67% utilization of the available credit. That's going to hurt your credit. So the trick when you're trying to play the credit game and maximize your credit score or build or establish credit is to use very little of that credit limit to maximize the results that you get for everything you do with that card. So a great example that I like to give clients is to take something like Netflix or Spotify. A lot of us have some type of streaming service with a small monthly amount, 15 bucks, whatever, and set that credit card up to have that billed to it. Lose the credit card, ditch the thing, and basically it's your Netflix bill. So when it comes, pay it off. But at any given time, you have a very small balance in relation to the credit limit whenever they report to credit. It doesn't matter when they report, it's at the most, it's going to be 15 bucks. So that's a great example of something simple that you can do to build great credit. So establishing credit with a credit card is important because it gives that dynamic look into your budget. For the credit bureaus, there are a whole segment of the scoring models that you can't get points for unless you have a credit card account. So they do reward those that have them. But when you max out a card, or really even anything over 50%, it really starts hurting you if you're using more than half the credit limit. So ideal range is going to be 0 to 10%, but you need to have activity every month, and that's why the streaming type service, it's going to charge something small every month. There has to be activity. If you just pay it off and let it sit there for a month or two unused, then it starts factoring out of your credit score, and the benefit of that account suddenly undoes itself. So you need to have regular account activity, but use very little of your credit limit. So now you know a little bit about credit utilization. It's an insight into playing the credit game to maximize your credit score or establish credit. I hope it helps.